So I was 18 years old when I made my first $1 million. There's a dealership in Newport Beach that takes Bitcoin for Lamborghinis.
We all know stories of people making fortunes from crypto.
It felt pretty great.
But the reality is, only the most disciplined investors are running away with large profits over time. But before we go any further, don't forget, like, comment, subscribe. And when you're done watching this, why not go check out some of our other great films on all things crypto. No one gets into crypto to lose money. We all want to be crypto winners. But unfortunately, as with all investing and trading, there's no guarantee system to ensure profits and avoid losses. But there is definitely ways you can make it more likely you'll be in the green and not in the red. Here's my top tips for crypto investors. Okay, so before we kick off, a word about crypto: volatility.
I love volatility.
Crypto is one of the most volatile markets you can invest in. That volatility brings the possibility of high rewards, which might be one of the reasons you're drawn into crypto. Just remember, it can be a pretty crazy ride. And that's not even in my top tips. You can have that one for free. All right, let's get it started. It may sound obvious, but it's useful to know why you're getting into crypto, because it will influence your investment decisions. Maybe you're looking for long-term returns. The majority of the really big winners you've heard about, the people who are now worth billions, are long-term investors who've been in crypto since its early days. If these early birds have thought to sell at any point, none of them would be in the position they are in now, but they believe in the projects they've invested in. Alternatively, you might be interested in trying your hand at trading cryptos in the short term for potential quick returns. Short-term traders look to benefit from crypto's volatility to achieve profits. By studying market indicators, they look for indications which direction a project is heading in the near future. Whatever your motive, knowing your goals will affect what, when, and how much you choose to invest. This one seems like a no-brainer, but let's say it anyway. Never invest more than you can afford to lose. Particularly when price stability is, how should I put this? Very unstable. Set limits on how much you invest in a particular digital currency and don't be tempted to trade up. US Senator Elizabeth Warren's book, All You're Worth: The Ultimate Money Plan, famously laid out a simple blueprint for budgeting with the 50-30-20 rule. That's 50% of your income on necessities like housing and food, 30% on optional fun stuff, and stock away 20% in savings. That's the area that you use for investing or trading.
If you understand overall where you're spending, you don't have to keep track of every nickel.
In a market that can see a cryptocurrency's $40 billion market cap wiped away in less than 3 days. Yeah. Luna, I'm looking at you. It's wise to proceed with caution and start with relatively small investment to try and learn the complexities of the market with minimal risk. One useful technique to help you navigate this bumpy ride is dollar cost averaging, which can smooth out the impact of volatility. Divide up the total amount you want to invest over a set period into smaller payments which occur regularly regardless of the asset's price. It could just be putting $25 a week instead of $100 a month into crypto, but it acts like a volatility shock absorber.
High quality at a low price.
This is a common mistake for crypto beginners. Going for a cryptocurrency because its price is low or it seems affordable. The decision to invest in a particular cryptocurrency shouldn't be based on price or affordability. It's more important to pay attention to things like market capitalization, trading volume, history, and total supply. Market cap is the total value of a cryptocurrency. It is calculated by multiplying the price of the cryptocurrency with the number of coins in circulation. Generally, a high market cap indicates a safer investment, while a low market cap indicates higher risk, but potentially higher rewards. A simple yet tough thing to do in any trading is to know when to get out. Whether it's with a profit or a loss or just your initial investment. Thankfully, there are tools that can help you with this. A stop loss is an order to sell or buy an asset once it reaches a certain price. Say you buy $1,000 worth of a cryptocurrency and you set a stop loss at 20% below that level. It will automatically sell your asset once it hits $800, meaning you should walk away with 80% of what you first invested, even if the crypto drops significantly more. And the same is true with profit levels. If you have a minimum take profit level, stick to it, don't be greedy. A stop loss order will help you with that. Beware though that in a volatile crypto market where crypto can drop by 10% only to recover moments later, a stop loss order could actually work against you. One way of managing this is to keep your stop loss level in your mind rather than setting it on your account. However, this does put the responsibility firmly on you to monitor the markets and stick to your loss and profit levels. Rug pulls, pump and dumps, phony investment schemes, phishing scams. There are a load of scams out there, so you need to be aware. Always do your own research on a cryptocurrency. That way you're making decisions on what you know, not what people tell you.
Foreseen and predicted.
Don't be swayed by the noise of the crowd in crypto. Some people offering trading and investing tips might not have your best interest at heart. I know, unbelievable, right? There are plenty of examples of phony developers promoting a new project, taking advantage of investors' FOMO, and then disappearing with vast sums of money. Look out for telltale signs of a crypto scam, promises of guaranteed returns, excessive marketing, a lack of visibility about the team behind the project, a poor or non-existent white paper laying out the crypto's fundamentals. All of these things should be red flags because they could indicate a scam. To find out more about crypto scams like rug pulls and how to avoid them, we've got a film coming up, so be on the lookout for that. With the volatility and uncertainty of the cryptocurrency market, it pays to spread the load. Diversifying assets is a commonly used tool across all financial markets to offset losses and minimize risk. It also forces you to learn about different coins and projects you might not have previously discovered. It is quite easy to diversify your asset holdings due to the number of wide-ranging industries that utilize blockchain technology. If one project that aims to replace traditional fiat currencies like Litecoin is underperforming, there may be another category of cryptos that are gaining traction, like a metaverse token, Sandbox perhaps. But be aware, it can be dangerous to over-diversify. If you have your eggs in too many baskets, you're more likely to be reliant on the whole crypto market to trend upwards, opposed to just a few solid projects that you've handpicked. I cannot emphasize enough the importance of putting in the work before you make any crypto trades. You wouldn't buy a house without doing the proper due diligence, so why risk your hard-earned cash on a cryptocurrency without making sure it's legit first? And there's no excuse for making an investment with little or no understanding of what you're investing in. There is plenty of accessible data out there that can be analyzed, giving you insight into the fundamentals of any particular coin, from its white paper to the team behind it, its market cap, volume, and price history. One unique area for crypto is on-chain analysis, which involves looking at the public data held on a blockchain, giving a number of metrics to assess a cryptocurrency. For instance, the spent output profit ratio calculates aggregate profit and loss realized on a particular day. The SOPR is a reliable oscillator that indicates a bullish or bearish market. So take the time, practice reading charts and identifying patterns to inform your trading strategies. For more detailed insight into crypto analysis, check out our upcoming films on technical, fundamental, and on-chain analysis. Doing your own research is key, but unless you're intending to spend hours every day analyzing the markets, it's also worth listening to what other people have to say. Crypto does, after all, go hand in hand with social media. The explosion of crypto has given the rise to countless so-called experts, news sites, podcasts, and influencers offering constant advice.
You heard it here first. Bitcoin is going to zero.
It's not going to zero, and if it's not going to zero, it's going to 1 million.
Unfortunately, not all of their advice is good advice. And in fact, quite a lot of it is trash. So make sure you hunt out trustworthy sources that offer reliable and relevant, up-to-date content. A good way to do this is to follow people who are actually putting out fundamentals and numbers, and not just people who are following and riding hype. I don't want to point any names out, but if you do look at the recent history in crypto, hype dies down, but fundamentals, numbers, utility, use cases, user growth, that never dies down in crypto. That stays relevant. So follow what is staying relevant in crypto and continue to grow adoption, and you will be good. The various market trading tools that crypto technology allows open up a whole new ballgame for making money aside from traditional trading gains. One popular method is staking your cryptocurrency holdings on an exchange or directly through a network like Deadliest. Staking allows your personal holdings to be used as liquidity support for a network that uses the proof of stake protocol. In return, you'll receive rewards in the form of newly minted coins or tokens, earning you a nice passive income. Other passive income streams for crypto include yield farming, cloud mining, and crypto lending. That's my 10 tips for investing. I hope you enjoyed this video. Don't forget, comment, like, subscribe, and keep a lookout for more videos just like this.